All right, welcome to W3's quarterly wrap-up here. Q3, another volatile quarter in the books. Started out strong in July, S&P up 8.1%, and then gave most of that back in August and September. In fact, we gave it all back. We've actually touched new lows this year. Again, the S&P 500 as a data point. Where to begin? Bond markets on the back of the Fed raising interest rates this year. U.S. bond markets down about 15%. Global bond markets down right around 20%. And the equity space not looking much better. Got the S&P 500 down 23 to 24% year to date.
Yeah. I mean, this has really been kind of a pretty one-dimensional market that is obsessing around interest rate policy, right? And so every data point that we're getting that normally have more measured movements on markets, such as the jobs reports and inflation data, all of a sudden have a very outsized impact on markets. So got actually an optimistic jobs report in August that created some positive momentum in markets, but that was quickly tampered back in September by a miss on the inflation print. And then on the heels of that, a UK tax policy that stoked even more fears of inflation across the pond there. So we definitely continue to have a very inflation sensitive market that is really looking at Federal Reserve policy.
Yeah, I mean, strong dollar's not helping Europe out much right now either. It's a rough market this year, but again, our messaging to our clients really, volatility in and of itself, it's a normal thing. It's a normal part of investing. We're encouraging our clients again to stick with it, to stay the course. Again, it's boring advice, but it's advice we're convicted in as long as their financial plan, things make sense. Again, looking forward, looking into the future. One tidbit in terms of planning that we're looking at doing, that we do with our clients, might want to take a look, is tax loss harvesting. Year like this, right? Rough month in June, rough month in September, depending on when you started your after-tax portfolio and depending on the amount of turnover inside of that, might be some opportunities to take advantage of some loss positions. Maybe pocket some of those losses to carry them forward for future years. And, again, I guess provide a little silver lining to this year's rough markets.